The CME with the news and the number.
Yes, jobless claims for the week of December 20th, and that's ending December 20th on initial claims, 214,000, well below the 225,000 we were expecting. 214,000 would be the lowest since, well, the last week in November when it was 192,000, and that was the lowest going back to 22 at 189, which was the lowest since the 1960s. So we are definitely under 225-ish, are considered ultra low. And if we look at continuing claims, after a couple of weeks of being under 1.9 million, they pop back over 1,923,000. Of course, the last time we were above that would be third week in November. But what is interesting is having those two weekly numbers under 1.9 million. The first time we've been under 1.9 million since April. And the reason I find all of this so curious is because we are now all questioning in a significant way some of the seasonality issues to make adjustments to these numbers. And it takes a while to get the GPS back. And that is a bit disturbing. It's not like Thanksgiving and holidays don't occur every year, but the process is a bit cumbersome, and we even learned during COVID that seasonality and seasonal adjustments can really kind of play havoc with the numbers. Suffice it to say that many now believe, the Wall Street Journal did an article about this, Andrew and Joe, about a week ago, that some of the generous welfare programs might be kind of distorting the jobless claims figures, keeping them a little bit more depressed. On interest rate side, here we hover at 416. That's down a basis point for 10s. The notable trade of late has been in foreign exchange. Dollar index on pace for the worst year since 2017. Much of that, though, was the premium put in it during COVID. But nonetheless, if it closed at levels it's currently trading at right now, it'd be a 3-month low close. Andrew, Joe, the whole gang, back to you, and Merry Christmas from Chicago.
Merry Christmas to you, Rick Santelli. Thank you.